Hello.
How are you?
I'm good, thank you. Lovely to see your face.
You too.
A fine Thursday evening. It was really warm in Sydney today.
Oh, it was actually really nice here too. I'm wearing a jumper, but I kind of regretted it. But I did that thing where I didn't put anything under it. So I've been stuck in this jumper
There's no
all
option.
day. What a dream. I can see our chat room is going off. I absolutely love that. And I think my favorite part about this webinar platform is that we can actually have a chat to you guys. Like, we can see everything going on the screen in the same way you can. So if you've got any questions, feel free to pop them there. The way today is going to run, and what I'll do is I'll give you guys a quick run over of what we're going to do this evening. But before we get there, we would like to do an acknowledgement of country. So we'd like to acknowledge and pay respects to Australia's Aboriginal and Torres Strait Islander peoples. They're the traditional custodians of the lands, the waterways, and the skies all across Australia. We thank them for sharing and for caring on the land which we are able to learn. And we pay our respects to elders past and present, and we share our friendship and our kindness. So, Rachel, today we are going to be talking about investing, and if that is not the most requested topic in our community, I don't know what it is. Are you excited to get into it?
I'm so excited. I think we've had our partnership for a couple of months now, Victoria, and it's just been so inspiring for me. I'm obviously, as a young female myself, I'm so passionate about more women getting into investing and everyone getting into investing, but really having that access that has really only recently become available for so many of us. So I'm very excited to chat everything investing tonight.
Me too. And I think my favorite part about this is you came from She's on the Money. Like, your experience with us has been as a community member, then you started at Superhero and you were like, oh my gosh, Victoria needs to know all about this.
Yeah,
and then
absolutely.
I did, and I'm so excited about it. So friends, tonight we are going to go through a little presentation about what investing is so that we can learn and all get on the same page. Then Rachel's going to tell us a little bit more about Superhero and what they get up to, and just teach us a bit more. She's got some fun stats about investing, which is my favorite part. Then we are going to do a Q&A. So we're going to jump into all of your questions in the chat and just chat investing for a few minutes and have a chat about exactly what you want to do. So what we want to see is those questions in the side, because we're saving our favorite ones as we go. Obviously, there are going to be some similar ones, so please don't be offended if we don't get to your one specifically. And then we're going to announce the winners to our investing competition, Rach.
Yeah, I'm super excited for that. For all of you who have given us a follow over the past couple of weeks and have entered that competition, thank you. We've been very excited to be along the journey and can't wait to announce the winners.
Yay! And I already know who they are, and I've already had a little bit of a stalk of them, so I love that, and I know that they're going to be excited. And Mitch has just sent me a question and said, is this going to be recorded? Yes, of course it is, and I'm going to chuck it up on YouTube for those of you who might not have been able to make it, or you want to, just rewatch it again later. So what do you reckon? Jump into it, Rach?
Let's go.
Let's get our slides up. Can you see them?
Maybe I can't.
Neither can I. Hold on. It turns out I've actually got to go back to the start of the slides that I've uploaded and actually hit go.
This webinar system is more complex than we are, obviously.
Most things are more complex than me. But here we are. The She's on the Money Investing Q&A. Are you ready for this? So first things first, the most exciting part of any webinar that includes me is a general advice disclaimer. So anything that Rach and I talk about this evening is general in nature and doesn't actually take into consideration any of your personal circumstances, which is so important for us to consider and just put up front, because obviously, we're talking about investment in general. We're not saying, hey, this is going to be the perfect product for you, although you'll probably fall in love with Superhero, let's be honest. Before we even get into what an investment is and how it works, I think it is really important to understand the two basic points of how to create wealth. And the first thing there is spend less than you earn. And the second thing is consistent long-term investment. And I'm pretty sure Rach would agree with me on this one, because that is where the magic of compound interest and dollar cost averaging are going to make things shine, and you're going to be so excited about it. But I think that wealth creation is actually much simpler than people think it is. It is so much easier. It's just these two things, but they are much easier said than they are done, guys. The next thing there is All right, let's just start at the basics. What is an investment? So to define it really boringly, it is something that can be purchased with money that is expected to produce an income or a profit. Now, the idea would be to purchase something that could be any one of our 4 asset classes, which I will get to very quickly. They receive an income, or they increase in value, or they might do both. And if you've listened to any of the She's on the Money podcasts, you would know that my favorite type of asset is ones that do both, and that is what shares do for us. So that is how an investment works, and why we want it is to create wealth over the long term. To be honest, this is really important. I talk about money stories all the time, and when it comes to investment, it's so emotional. We need to understand before we even say, what are we going to invest? We need to understand how we personally feel about money and what that means. So this is just a really quick overview of exactly what the investment journey looks like from an emotional perspective. And the points that I've pointed out in Peach, of course, Rach, are euphoria and then this despondency down the bottom. So the important points here are these are where we make our worst decisions when it comes to investing. So, you could take a share on the stock market that everybody is talking about and getting on board, and it's kind of like stacks on, and you're getting really excited about the investment because all your mates are talking about it. Every media outlet is, reporting on it, and it's euphoric, right? It is, everyone is so excited about it. But that is actually the maximum point of risk when it comes to investing, because we don't actually see all of the flaws and we don't actually see the real value of an investment. We actually just get really excited. It's kind of like herd mentality. But that is the point where we are most likely to lose our money. It's when we're investing in things that are either overpriced or investing in things that don't align to our values because of that herd mentality. Then at the very bottom, it's fear. So I've actually gotten rid of the key point, so I apologize there, but I can tell you right now it is fear. And that's actually the point of opportunity in investment. Like that is where you're going to have the most impact. And that's when things are kind of like going down, like going into the GFC or more recently when we're going into the recession that we were going into. The smart investors were continuously investing or getting into the market for the first time. And the investors that were making bad decisions were seeing their investments go down and they're like, oh my gosh, my money's losing money. I'm going to pull it out so I don't lose more. And that's where we actually shoot ourselves in the feet and we crystallize losses that we don't want to crystallize. So I think important to understand when it comes to investing, we need to put our fear and our emotions to the side and really look at the facts, look at what's going on and actually, get into the superhero app and see how the stocks are performing and what that actually looks like, as opposed to listening to the media on things like that. Would you agree, Rach?
Absolutely. And we've seen this recently with the GameStop.
Oh my gosh, yes.
Right? And everyone was talking about it. My friends that had never invested in their life were all of a sudden talking about this GameStop thing that wasn't even happening in Australia. And everyone just saw how it's just volatile, right? And a lot of people didn't understand exactly what was going on. So it's been a very, very interesting year in the whole investing world, and it's only continuing, I think, to get more and more interesting. But it's exciting, but there's a lot of considerations for sure.
Yeah, absolutely. And I think that that's a really great example of just herd mentality. It didn't actually end up benefiting most of the people that got in when they heard about it. It was the people that benefited got in before anyone was talking about it.
Yeah. And that's often the way with big media.
Exactly. Just don't listen to them unless they're talking about us, Rach, in which case you click all of those articles.
Exactly.
All right. So the power in investing is in compound interest. And Albert Einstein, obviously a great friend of ours, Rach, said that it was the 8th wonder of the world. Now, the power that compound interest actually has is the time that we have. And I'm going to make a grand assumption here and assume that most of our community that is, logged into this webinar, we're young. We are probably, heading towards 30 or just past 30. And, we actually have a lot of time behind us, and that's going to be our power. So over the period of time, and I've actually got a really good example next, Rach, so I'll flick to it really quickly. But the power is in time so that we experience exponential growth and your interest starts earning interest for you. So why is it wizardry? Compound interest compounds over time, and it's not as easy to comprehend as you would think, because human minds are really linear. We just think 1 + 1 = 2, 2 + 2 = 4, but we don't actually have the ability mentally to comprehend compounding. Unless we've studied it and, have actually gotten on it, it is not our default. So compound interest essentially goes like this for the first 10 years, then it starts to pick up a little bit, but then after 30 years, it really starts to shoot. And you can see in this example, if we look at that $500 line, after 30 years, great, you've got $670,000. That's pretty good. But give it another 10 years and you've got $1.5 million from a $500 monthly investment. Like, that is powerful. That is double what you had before. And that doesn't even take into consideration superannuation or any other type of investment that you hold.
Exactly. It's amazing. And I know that Money Smart has a really good compound interest calculator, Victoria. I don't know whether you used it, but I used it when I was first investing. Yeah, it's such a good tool, because you can think about like how much you've got to invest, or if you want to get started with a small amount of money, you can see kind of how that would look and then change it really easily, which is really great.
Absolutely. And I think that that's actually one of my favorite resources, because it's not product aligned. And
absolutely,
my community would know that I talk about this website a lot, whether it comes to debt or, investment or even just money knowledge. I always direct our community there because it's government run. So there's no ulterior motive, where there are a lot of businesses out there that say, oh, we do great comparisons, or, we do this or that. And it's actually just really convoluted, because it's run by advertising agencies that, place different ads and say, oh, this product's really good, but it's because they've paid for it. So I think for me, when I go and I just want to look at calculators and have a proper understanding, that Smart Money website is priceless.
It's awesome.
It's so good.
Yeah.
Next slide, because I'm going to run into your time and we can't have that, Rach. This one is about starting young and starting now. And my community know that my favorite quote is from Little Things, Big Things Grow. And this diagram represents the difference in what you need to invest monthly to reach $1 million, depending on where you are starting. So if you start at a young age, it's only a few $100s, but every 5 years, you wave the amount of growth exponentially, and you just can't put off starting investing. So you'll see there that to get to $1 million when you are, down here, I know that our faces are covering some of it, but I promise you those stats aren't that good. At the age of 20 and 25, just so you know, it is $500. But you can see them just here creeping up, right? You can see it creeping up, and at 40, it's, less, it's really palatable. But by the time you are 50 and 55, when people are usually starting to think about retiring, you're going to have to cough up at least $4,000 a month to get to the million, which is what a lot of people have as their retirement goal. So the sooner you start, the sooner you're going to be able to have an impact, but the less you're going to have to invest on a monthly basis ongoing to have the same outcome.
Yeah. Crazy. Yeah, I saw Sky in the chat, you said Money Smart app. It's the moneysmart.gov.au website for you there. If you want to go, it's a great app, great website to get you started. So it's not an app, it's the government website.
Yeah, I've just Googled it, so I can drop that in for you right here. Hold on, I'll just chuck it in chat for you guys so that maybe while I'm talking, you can have a bit of a play or do it later. Okay, so next slide is asset classes. So obviously we want this to be holistic, and we don't just want to go shares. We want to talk about the different assets that actually exist. And when we talk about the different assets that exist, we've got 4 different main asset classes here in Australia. So we've got cash, which most of us are already invested in because we have bank accounts and savings accounts. We've got fixed interest, which is bonds. You can also buy bonds on the ASX. Got property, which is a great Australian dream. Everybody wants to buy property. And then we've got my favorite asset class, which is shares, and that's absolutely no secret. When we talk about investing, I think there are 3 key words that I want you guys to walk away with an understanding of tonight. And I just feel like these 3 words get thrown around to sound a little bit smarter than we actually are sometimes. And investment advisors, we're really good at trying to make ourselves seem really smart on topics that are not actually that complex, mainly because a lot of advisors want to make sure that, the cost you're paying is actually worth it, right? So first is volatility. And that's just how much the price of your asset rises and falls. So how much it goes up and down over time. Capital, that's cash. That's what you are starting with. That is the initial investment that you are making. And liquidity, that's essentially how quickly you can get rid of that asset. And that one is really important because as young people, we usually want a lot of flexibility and we usually invest in shares. 1, because we might not be able to access property, and 2, because we want that financial freedom. And I'll get into my next slides and I'll talk about liquidity a little bit more. So cash, I'm going to fly through these because I know you guys are here to mainly learn about shares. But cash, again, really high asset security. Lots of pros because it is really secure, low volatility. It usually produces a really low income. More recently, people are kicking up a little bit of a stink because all of the banks are now dropping their interest rates. And I think a lot more people are now turning to other assets like the share market to work out where they're going to get that gain from. Assets really liquid though. So that means that if you need that money in your hand for any type of emergency or anything, it's right there. And I feel like that's a really nice thing to have because when we compare that to an asset class like property, to get that money from your property back into your hands, you actually need to put the house on the market, then have a seller, then go through the whole process. And usually if you've got a speedy deal, that takes 90 days, but it's really dependent on actually having a buyer to actually buy your property to get that money back. Whereas with an asset like cash, you just go to the bank, you pull it out. And with an asset like shares, you just click sell and it's usually back into your bank account within 3 or 4 business days. So I think that's worthy of consideration because a lot of people say, I don't want my money tied up. Why do you associate that with shares? But you seem to think that property is going to afford you more financial security when in reality, it often doesn't. Fixed interest, we were talking about this just before. Again, I'm going to flick over this really quickly. That's stuff like bonds, again, quite stable, but less returns, a little bit higher security. Property, very sexy. Everybody in Australia just seems to have this Australian dream, but you'll see the cons list often outweighs the pros. Obviously, capital growth over the long term. If it's an investment portfolio or if it's an investment property, you're probably returning growth asset or you're probably returning rent. So that would be the income, but there's really significant investment costs to get there in the first place. I said before, highly illiquid, and your value is not known until the sale. Then we've got, and I won't click through this because I've talked too much, but then we've got shares. So liquidity is high. As I said before, you can get it back in your bank account within 3 business days. Usually your capital is grown. Very often that share price increases, but your share will actually spit out, depending on what time of the year it is or what type of share it is, a dividend. And that is the interest that your share is making you. And smart young investors, they reinvest that dividend back into the investment market, and that's how we grow our investment portfolios. Something I love about shares that some people get a little bit stressy about is the value of shares are always known. I can log on and see exactly what my portfolio is worth today, whereas you don't walk down the street and see the values of properties across the banner of their driveway. You actually have to guesstimate a little bit by going, well, the property across the road had 1 less bedroom, but it sold for this, so maybe we'd get that, but we don't know. So I really like knowing because I'm so type A, it's not funny. Love a list, love to know what I'm up to. But again, there's always a risk when it comes to investing. And that's why we talk about diversification and making sure that we are not investing in only one asset class. This is my last slide for my intro before I actually get to talk to you about the questions you really want to hear. Just wanted to preface the conversation with all of this. And I think that this is a really powerful slide. So for me, this slide I stole from Vanguard. I've referenced them, so I'm sure they won't be too mad at me. But this chart shows the performance of different asset classes over time. Now, I don't want to focus on which asset class is the best performer because over time this clearly varies. But rather, if you look to the left of the chart, you'll see that if you invested for 10 years or longer, you don't actually lose anything in the market. Where losses happen is when you get caught up in the volatility of the market and you get rid of your portfolio without any care, and that goes back to that emotional journey where it might be really low when you're really stressed and you sell out. What I want to point out here is, can you guys see my mouse, Rach? Like if I move this, can you see it?
I can't see it, but maybe I'm blind.
That's cool. I'm just going to point out. So right beside 2010 on the base of this diagram is that really big drop in the share market in about 2009. That was the GFC. And if we look at that, a lot of people sold out because they were really stressed about losing all their money and they were just taking off the table what they had left. But as you can see, the market's more than recovered. So the smart investors were the ones that stayed invested, potentially put more money into the market at that point in time, and then held out over time. So I think it makes a lot of sense to actually remember that when it comes to investing, you are right, there are always risks associated. But when you add in long periods of time, that risk diminishes significantly. How do we feel about that, Rach?
Yeah, perfect.
Yay!
Great intro.
Oh, thank you. Well, I feel like lots of people have some questions, but before that, I feel like, given you guys did sponsor this whole app, it would be very fair of us to do the superhero presentation, but also I think it's important because so many people have been DMing me because you guys have been working with us and going, oh, what superhero? How does it work? Like, what's this? What's that? So like, let's have that conversation. And while you're talking, I'm going to get into the chat. And if anybody's got any questions, I'm interrupting you. I'm sorry.
Amazing. Yeah. So
ready?
I am ready.
Yay. All right. This is the welcome to superhero.
All right. This is the welcome to superhero slide. So before we get started, I thought it would be interesting just to go through a few stats around investing that I got from the ASX investor study. They do a study each year on Australian investors, and they have some really interesting insights. And some of those were around females investing. Now, I know not the whole She's on the Money community is female, but I know that quite a lot of it is. So, I thought it was interesting to call out that in the 2020 study that 45% of those who had started investing in the last 12 months were women. And that to me was really high. I think, and I don't know the 2019 stat, but I think it would have been quite a lot higher than it had before, and that just really inspired me that there's more women than ever
it's cool
that are starting to invest. And I was like, we're nearly there, we're nearly got the 50%. And then I looked at the next stat, which was those intending to invest in the next 12 months, which we're in that time now.
Absolutely.
In 2021, and that number was 51%. So let's go, girls. We're getting there, and we're overtaking the boys a little bit, it seems, in terms of those wanting to get into investing, which was just, totally. Really, really great to see.
And Rach, research tells us that women are better investors than men anyway. So it makes sense to be having more of us in the market anyway.
Yeah. And well, I think, traditionally we hear that women are a little bit more risk averse. And so while I think historically, maybe some women have been averse to getting into the share market because it seemed risky, I think more and more of us are realizing that there are ways to minimize risk and still invest. And so, it's great to see. And then the third stat there was just around young investors currently making up, or in 2020, were making up around 10% of ASX investors, those between 18 and 24. And I just expect that number to grow as well. I think Superhero is a digital and mobile first platform. And as, as we grow, hopefully, and there are other platforms out there too, but, as the access to investing grows and we focus more on digital and mobile first, younger people have greater access than ever before. Whereas before, it might have been something that only the older finance guys had access to.
Totally. I think that's something that I really like about Superhero as well, because I obviously care deeply about my community and not wanting to go, this is the only product for you. And you guys are like, nah, let's talk about other products. Like, we're a really great option. This is what we do. We're a cool team. Like, you're also young and dynamic, and I think you just get it. Like, it's an option to put on the table and go, nah, cool, what are you guys up to? And I think that that's been one of my favorite things, because it's meant that this partnership has been able to be really organic, and I just get out of it so much. And, you know, even just stats, I'm like, yeah, what's up? Like, can I have some stats for the pod? Can I have this? Can I have that? And you guys are like, yeah, of course. Like, this does this and that. And it's not all just you superhero. But I guess in a way, you've got a lot of fans in our community.
Yeah, I mean, I was a She's on the Money fan, and I just want other people to know what I learned, and then, you know, what led me to not only working at Superhero but using it as well. So
it is so cool.
Yeah, it's very exciting. So yeah, I thought the best way to go through this, and I didn't just want to, you know, pitch Superhero really hard to you guys. I actually wanted to take a few of probably the most common things I hear, particularly from a lot of my friends around investing. And I know there's a lot of questions on micro investing that I've seen in the chat too. So I guess this kind of comes in with this question here, or this assumption that a lot of people have, is that I need thousands to start investing. And like, straight out, that you don't need thousands to start investing. Now, there are micro investing platforms out there that are a little bit more of a managed investment option, where you're not necessarily buying the shares directly, but it's more of a managed option for you. And that can start from really low, Victoria. I think, you know, there's ones that allow you from just a couple of dollars to invest. But that is micro investing, and that's more of a managed investment scheme. Yeah. Superhero is not a micro investing platform.
No.
So we provide you with access to trade Aussie shares. So any Aussie share that's available on the Aussie exchange, the ASX, you can buy through Superhero. And that includes ETFs and the like as well. And you can start investing from $100. So we provide you access directly to buy those shares, and you can start from $100. So I think we are one of, if not the lowest, in terms of our minimum for actually direct investment. I know there's quite a few. Yeah.
I've done my research, you were not wrong.
And $100 to me, I mean, I always like to compare that to other things that I buy. So would I spend that on a dress? I mean, I try to bargain shop as much as I can.
But I'd also spend it on a dress.
I did buy a decent iconic order the other day. But yeah, would I spend that on a dress? Yes. So should I spend that on starting my journey towards my financial future and towards building my wealth? Absolutely. And that's what it came down to for me when I first started.
Yeah, and I feel like it is very cool, because a lot of people say, well, what's the difference between, and I can see this in my questions of like, well, what's the difference between a micro investing platform? And lots of micro investing platforms are just managed funds that you're putting your money into that bucket. Whereas with Superhero, you're actually getting on the ASX on your own. And that's why the entry point is a little bit more. And I think a lot of people are like, well, I can start investing with $5 with micro investing platforms. It's like, yes, but that's a managed fund approach, whereas this is you buying shares. And to be honest, you need to start with $100 at least when buying shares, because they don't all cost $5. If they did, I would buy all of them, Rach.
Yeah. And again, that's the power, like you said, the power of compounding. Like $100 isn't much money, but it's a decent start to get you on that journey. Yeah. And then if you're doing that on a weekly, monthly basis, that's where you really start to gain. To gain there. Yeah,
absolutely. Yeah. And I think that, so someone's just asked in the group, Teresa said, is Spaceship an example of a micro investing platform? Yes, it is. So Spaceship, Raise, they're two of the most talked about platforms in our community, but both of those are micro investing platforms.
Yeah. So
all right, next slide.
Cool. So investing is too risky for me. Again, Victoria, you mentioned this.
Yes, sorry about that.
No. It was a great intro. So is investing more risky than having your money in a savings account? Technically, yes. With a savings account, you know that you won't lose your money. True. But like you said, the interest rates on cash haven't been that great for a while. I can remember the days of getting my, 3.5% bonus interest.
Oh my gosh, I know. What the hell? We didn't know what we had.
I know. And then it was all gone. So
imagine if we knew what we had before it was gone.
Yeah, exactly. So I think that for a lot of people was a contributing factor to starting to think about investing. Definitely was for me. I was like, well, my money's just sitting here. I want to look at options to make it work for me, right? Mm-hmm. So yes, investing is a little bit more risky. You can't control the market, you as an individual, but there are options for you. I think so. Diversification is a big thing that we know, and they always do say invest in what you know. Mm-hmm. Now, in saying that, so if you don't know a lot about the world of mining, for example, you might not go and place your money in a small mining company. And again, it all depends on your goals and your budget and your risk profile. But just think before you're investing. And if you're not willing to do complex research into companies in depth, there are other options for you to be able to kind of bring your risk back a little bit and diversify. Yeah. So, I mean, ETFs are a great example of that. Again, I can't recommend what you should invest in, but what ETFs do is they provide you with access to a number of companies while only having to buy one stock on the market. So you're putting your money, you're trading once, but you're getting access to multiple companies. So your risk is not exposed as much, and your performance isn't. And sorry, I'm not explaining this as well as I could, but your performance isn't based on just one company. Yeah. It's kind of averaged out across multiple companies. And we know that on average, the Australian share market has gone up. I don't know the exact number, but around 10% a year over the last 30 years. So you can kind of trust that if you do diversify your portfolio, and Superhero shows your portfolio in a really, really cute little dial. So you can kind of show across, you can see across industries. It's all color coded. I love it. Mm-hmm. So you can see across industries where your investments are, which is, I think, a really great feature that allows me to see kind of where I'm invested and where I'm comfortable as well. So I work in tech, so I invest personally a little bit more in tech because I love it and I'm interested in it and I love reading about it. But it all depends on you as an investor and yeah, what your risk profile is too. But in saying that, yeah, investing being too risky, again, you don't have to go and put your entire life savings into a share investing portfolio straight away. You can just start with $100.
And I think that goes back to what I was talking about. Like, you're right, shares can be risky, but we mitigate that risk with two things: diversification and time. So not just going in and buying one stock that you heard about, picking a number of different stocks from different industries and segments of the market, and then also staying invested. I always say to my clients, like, we want to invest for a minimum of 10 years. And I know people are like, oh, but I want to buy a house or I want to do this. Like, I just want to mitigate every risk that is, in existence, really, to make sure that you are as safe as possible when it comes to investing. So for me, the longer the better. And we are young. Yeah. So the question is really about goal setting as well. So why are you investing? If you're saying to me, oh, because I want to buy a car in like a year. It's like, I don't think that investing is the right thing. That is the wrong goal for investing. We want to be talking about financial freedom, longer term investment goals, rather than those short-term ones where you could end up having a negative investment experience, which in my experience will burn you and you won't want to do it again. And therefore it completely compromises future you's ability to create wealth. So for me, time and diversification mitigate risk.
Absolutely.
What else we got, Rach?
Investing platforms are difficult to use. Now, this one historically, investing platforms were difficult to use. Even kind of a year and a half ago when I'd wanted to invest for so long, but I just didn't know where to start. And when I considered the options, there was a lot of charts going around, a lot of acronyms, a lot of codes, and I just got frightened. And this is me, coming from, instead of Monopoly, my dad played a game called Cash Flow with me growing up, which was all about share investing and investing in property. So I think I've got a pretty long financial history when it comes to investing, but I was still scared. So I can only imagine people that have never heard about it, or their parents might not have taught them. So I think historically, it has looked really complex, and the platforms have been complex to use. But and again, Superhero is not the only digital platform out there, but our platform was built mobile first and digital first, with the digital native in mind. In saying that, it doesn't mean that older people are excluded by any means. Our core, I guess, pillars are that we are accessible, affordable, and understandable, and secure being the fourth one, very important. But we don't do jargon. We want people to be able to, sign up within minutes. We're always there on live chat if you need support. And the platform itself is built for accessibility. So you can see, even on the right there, that's our screen for investing. So you can see very clearly, we don't have heaps of charts everywhere. There's some key simple numbers that you need. And that's very core to everything that we're building, is simplicity and understandability for everyone. And we always think with the first time investor in mind. Everyone else will get it if they're more experienced, but we always think, will someone that's never invested before understand this and be able to use this?
Yeah, easy. So next.
Fees for investing will eat up my returns. Again, this one is one I was afraid of. When I first invested, I looked at the fees, and I'm not going to name names, but for some platforms, and I was like, well, if I'm only investing for the first time, I don't necessarily want to put heaps of money in. But when I look at the fees, it's eating up 10, 20% of my return. So I'm going to have to make 10, 20% on my investment to even, break even, and to start making money. So I think, again, not just a Superhero plug, but look at your fees when you are investing. And with Superhero, that's something that we focus on as a very core part of our offering, which is that we have unlimited $5 trades. So no matter how much you are investing, it's $5 a trade. We don't do, I know some platforms will just charge you one flat fee. Other platforms do more of a percentage base. So we're a $5 flat fee, which is the cheapest for Aussie shares in the market today that you can invest in. And we actually do $0 brokerage, so no fees at all when you invest, when you buy ETFs. So when you sell, so I think ETFs are a big part of what people invest in Superhero. They always show up on the top, on kind of the top three traded, because they do give you that diversification. And we offer free brokerage when you buy them. So for us, that was all about encouraging people to diversify and to invest in the long term as well, and get started without that barrier to entry.
Which is awesome.
Yeah.
And that's it from you.
And that's it.
Which is really fun, because our chat is blowing up and they've got lots of questions. Amazing. So you guys, if you've got any questions, I know that Monica said, can I ask questions based on Superhero? Of course, we literally have a Superhero expert.
Anything you want.
Anything you want. I think the important thing is that nothing is off limits. But I thought that one of the questions further down was, what's the difference between, I think they said Superhero and ETFs. And Superhero is the platform in which you invest in ETFs. So for those of you who might not know, an ETF is an exchange traded fund. And those are funds that are traded on a stock exchange like the ASX, just like ordinary shares are. But they're a bit different because they combine the investment advantages of a managed fund with the ease and access of just being able to purchase an individual share. So you can use ETFs for more cost-effective, easy access to markets and asset classes that take into consideration lots of different areas. So an ETF gives you diversification, especially when you are starting out investing. So ETFs are essentially baskets of shares or securities that are created by issuers or fund managers, and they usually try to replicate the returns of specific benchmarks or indexes, and they actually allow you to start investing in something that you might not have had access to before. Because if you go buy one individual share, so say you go buy a bank, you don't actually get any diversification there. You feel the ebbs and flows of everything, whereas an ETF is a basket of shares that some expert has put together for you to invest in. And the difference between an ETF and Superhero is actually that Superhero is the platform you can purchase ETFs on. Would that be right, Rach?
That is correct. And
do I get a prize?
Yeah, that was amazing.
Thanks.
That was such a thorough explanation. On our platform, at the top of our like invest dashboard, if you like, we actually kind of feature a few ETFs under something called themes, which I think is really helpful for people that are investing for the first time, because like, I think, again, acronyms like ETF, and there's so many different acronyms that are thrown around.
ETF, basket of shares, means you don't get exposure to just the volatility.
Yeah, and I guess we organize some of them in terms of themes, so you can see like this one's all about US tech, or this one's all about Asia, or this one's all about sustainability. So ETFs are often organized more on a thematic basis, which I love, because then you can invest in what you're interested in. And what you're invested in as well. So, I mean, there's everything from gaming and esports to agriculture to tech to healthcare. So, ETFs are a great way to diversify.
Yeah, we've had a lot of questions, and this might be, and I can see that they're really common. So a lot of people are saying, can you please explain chess, why this is or isn't important? Some people are saying, using chess, do we own the shares directly? And I think it's really worth, I guess, touching on this. So
absolutely.
Rach, you can take it away in just a second, but essentially chess sponsorship is a fancy way of saying that the ASX is keeping a list of who owns those shares. And it means that you would have to cough up the full amount of that to be able to access those shares, or however that works. And I just feel like people are putting a really big priority on this, when in reality, you just need to pick a platform that is really responsible and honest and reliable. So for me, chess sponsorship, it can be really important, but it doesn't change your returns. It doesn't change who gets the dividends. It doesn't change anything about it. But from you, Rach, how does Superhero actually access this or deal with this?
Yeah, sure. So we do get this question a lot. Again, I think we place a very high importance on transparency, and this word chess and HIN is another one that gets thrown around a lot, right? And so what a HIN is, it's called a holder identification number. And correct me if I'm wrong, Victoria, I'm not a financial advisor, but your HIN sits on the chess system, if you like. So that's kind of your identification number that says, you know, these shares belong to this person. Now, with some other platforms, you as an individual will have your individual HIN, or your identification number.
Which is just a number. So a HIN is just literally just a number.
Yeah, it doesn't mean anything. Well, it does, but
I mean, it means something, but I think people think it's this big complex thing, but it's literally just tracking.
Yeah, and chess is just a system. So Superhero is chess sponsored. The answer to that question is yes. Now, we operate a little bit differently in the fact that we hold what's called an institutional HIN. So Superhero itself holds a HIN, and it's an institutional HIN, and we operate what's called a custody structure. So it means that, for example, my shares that are invested in Superhero, I have a Superhero account, I buy shares. Now, Superhero, and it gets a little bit complex, but it's not really, and I'll get down to the basis of it in a minute, but Superhero holds your shares in your name, in a custody account. So your shares are in your name. If Superhero were to ever go bust as a business, nothing can touch your assets or your shares. They remain in your name. Superhero as the business and Superhero as the custodian sit completely separately. So you don't have to worry about your shares going missing or anything happening to them. You'd just be able to transfer those shares to another broker. In the case, and God, I hope it doesn't, because I'll be out of a job, that Superhero you would not lose your shares. And I think what's great to mention is a reason why we can offer such low brokerage is because of this custody structure. So, you know, I think the question I always ask people is, what is it that you're afraid of? And often it's, I'm afraid of losing my money if something happens. And rest assured that absolutely would not happen. And that your shares are still held in your name. You have complete what we call beneficial ownership rights as a shareholder. So, You get the dividends associated with your shares. You get access to things like share purchase plans. So when a company announces that, to their existing shareholders first, they're gonna offer shares or more shares at a certain price, you have complete access to all of that. So any rights that you get as a shareholder with an individual HIN, you also get with Superhero.
Totally. Now, we've got a question from AJ, and I think this is not the first time I've seen it pop up, so let's address it. And AJ says, more details on Superhero, please. Who's behind it? It's fintech, but who are they? And, obviously, I've been stalking your company. I've been chatting to these guys, but it's headed up by John Winters and Wayne Baskin, if I'm not wrong. John has a very significant experience in wealth management. And then Wayne was the Booktopia CTO, so the Chief Technology Officer. But you would obviously know them a little bit better than I would. So tell us about who they are, what do they do, where are they based? Because I think that nowadays, we're obviously investing in a platform, right? But we actually want to be supporting businesses and we know who they are. And I think something that was really surprising to a lot of people in our community, they're like, who's Rach? Why is a younger person doing this? Is an investment all about old white males? And it's not true. These guys are young. So tell me about them.
Yeah. So John and Wayne, they're awesome. I'm biased, but
yeah, you have to be.
John, I have to be, right? They're my bosses, so I've got to, So
they're
John,
listening to this. I know they are.
I think one of them might be.
I'm going to send them the recording after, and it's going to highly weigh on your bonus this year, my love.
So John was a stockbroker by trade. A lot of investment experience, and I think what was really inspiring to me, and I mean, he sold me the dream in under 15 minutes and convinced me to want to quit my job that I absolutely loved. So I mean, for me, the reason why I joined Superhero is because I loved my job already, and I worked for eBay for quite a few years before this. So jumped from e-commerce to fintech to learn something new. But I already loved my job, yet there was this thing, and John sold me the dream that I just couldn't pass up the opportunity to be part of, and to be part of building this new investing platform kind of from the ground up.
Awesome.
And so John was a stockbroker, and really, I mean, he was in the typical male trading world. I mean, I don't know whether you guys have seen Wolf of Wall Street, but I'm sure you can imagine. And I think he was just frustrated by the fact that, only people with high net worth could access these investing opportunities. And he just asked, well, why can't everyone have the same access? And so, he was really inspired to diversify the finance industry and to break it down and give access to everyone and equal access to everyone, which I think is just amazing and inspiring that he would go out, on his own and do this as well. I mean, these guys were very successful, and that kind of brings me on to Wayne, very successful already. Wayne's already built one business from the ground up. I think he started there, straight out of uni as Booktopia's first software engineer, and that company's just been listed as a public company on the ASX.
Which is so cool. And
insane.
And that's why I was like, tell me about them, but where'd they come from, what they do? Because I think something that's really important as investors nowadays is just knowing who's behind our companies, not just, oh, hey, they've got great branding, obvious. They've got a good team member, obvious.
Yeah.
That's the experience, great. But who are they? I like knowing that I'm supporting business at the same time. And I think that, we're all trying to do the best thing for ourselves, and we want to know that other people have our backs as well, and they bring a wealth of knowledge, which is very cool.
Yeah, absolutely. And I mean, I joined them because I'd kind of started on my investing journey, and the more I know, the more I want to know. And when I saw Superhero come up, I was just like, this is so cool. And this is the type of platform I would have been looking for when I first invested. And so to me, I was like, if there's a company that I can work for where I get to talk and nerd out on the stuff that I Google search late at night, that's awesome. And if I can be part of making investing more accessible to people that it previously wasn't, then I'm sold. And that's why I joined, and that's what I love to do. And doing things like this, honestly, is the best part of the job.
Totally.
Being able to talk to people and see people being like, I invested for the first time because of, something I heard, that's just so rewarding. Yeah. So yeah.
I love that. I love that. Emma has said, Victoria, do you have a superhero account? Yes, Emma, I do. It's not my it's not my predominant investment account, because obviously before I met Superhero, I was already investing. But of course, I trialed it and tested it and saw what it was all about before I decided that maybe I should work with these guys. What else was there? There was a really good question a little bit earlier, and it was from Liz. And this is something that comes up in my community all the time. And that was, what are the tax implications of selling shares? Now, the first thing we need to disclaimer here is we are not accountants. And the only person to give you a very clear outcome of this question is going to be your personal accountant.
Yeah.
But to summarize, your tax implications are going to be paying tax on the profit or the growth of the asset that you have purchased over that period of time. Now, this is not a bad thing. And I think a lot of people are like, oh my gosh, I don't want to invest because like there are so many tax implications. It's like, you're actually only ever going to pay tax if you've made a massive profit.
The way that I explain that one to people is when people say, oh yeah, but you'll pay heaps of tax if you make a big gain. And I'm like, if someone came to you and offered to double your salary, would you say to them, oh, but my tax will be doubled? Like, no. You would say, show me the money, right?
Exactly. And I think that it's so funny because I think people assume that, oh my gosh, tax, it's here to mess us up. It's here to, put us in a bad position. When in reality, the more tax you pay, the more money you have in your bank account. And that is a very sexy thing. So for me, tax is as a fickle one, because a lot of people are like, oh, well, does it increase my taxable income? Of course it does. Because if you create an asset that is creating income for you, you need to pay income tax on that because you've created an income. It's kind of like, it kind of is a no-brainer. But at the same time, I guess this leads into a second question that I read just below, and that was about super versus investing outside of super. And I'm hyper aware that, Rach, we are meant to go into telling everybody who the winners of our competition are soon, but I really want to talk about this because I get it all the time. Yeah. For me, you're right. Superannuation is the sexiest thing ever. Like, it is the closest thing we have to a tax haven in Australia. Like, you cannot you can't get a lower tax rate, 15%. What a money win. But the thing with superannuation is your money is tied up until you're at least 65. And that's the rules today. Over the last, since 1992, when superannuation became mandated, there's been more than 450, I'm pretty sure that's the number, do not quote me on this, I mean, I'm recording this, so I'm the idiot here, but there's been more than 450 changes to superannuation law about being able to access it, about, how it's taxed and how it works. So I'm assuming that over the next 10, 20, 30, for me, 45 years, there's probably going to be a fair few more. So for me, I don't like the idea that my asset that I'm creating to create financial freedom for myself is not going to be accessible until I'm the age of 65, as of today's rules. But given the state of the world, the state of literally everything else going on, we know for sure that that's probably going to push out to at least 70 because of how old we are and how old we are before we actually stop working. Nowadays, it's really pushing out. So I'm not comfortable with the idea that all of my assets would be in an environment that I can't access until I'm 70. And to be 70 is a privilege that is denied to so many people. And if you're waiting until then to have financial freedom, to me, that's too long. Do I invest in super? Absolutely. Of course I do. I do believe it's a priority, but investing outside of super for me is me creating financial freedom so I can have that freedom before I retire, so that I know it is in my control as opposed to the control of the government. And while you say, yeah, but Victoria, like, you pay less tax, to me, that is the cost I'm willing to take on for the freedom that having it outside of super affords me.
Yeah, absolutely. I'd say the exact same thing. And again, we can't provide tax advice, but if you just look up how tax buying shares, again, that Money Smart website's really, really good. I think
absolutely.
I'd go back there, but Superhero also does give you, we've got a little reporting tab, and it actually provides you with what's called your realized gains. So you can actually see your gains straight away, which makes it a lot easier at tax time. So that was something that we definitely thought about in terms of making things easier at tax time. So we do have those reports available, and you can see that in your Superhero account.
Absolutely.
And download those reports. Yeah.
So Amber has asked an interesting question. You guys can't see it because she direct messaged it to me. And she said, that $5 brokerage fee, is that tax deductible?
Do you know what? This is going to sound really bad to me, but I have no idea. But I don't.
Investing costs are tax deductible. Do you know what's really frustrating?
There you go.
And this is going to run over, but I was late, so let's let it run over. It's really frustrating as a financial advisor that if you were to come and see me as a financial advisor and say, Victoria, I want a statement of advice. I really want you to set up my financial life. And I go, great. That's not a tax deductible expense. But then after that, all of your costs associated with investing and creating an income are tax deductible. And that really frustrates me because as a financial advisor, I'm providing a plan and ultimately putting people in a better situation to retire. Therefore, like me on my rant again, I'm pretty much helping the government have people who have no reliance on that pension.
Yeah.
Don't you reckon you could just give them a tax cut for that? Like, because they're, oh, okay, cool, pay them the pension later because they've seen financial advice as not as a priority. Anyway, it's my rant.
Well, that's great. So they are. That's awesome. So yeah, I guess then you're really only paying on your true gain, which is awesome.
Exactly.
So yeah. It's great.
Exactly. And I think that's a money win as well. I know this is about Superhero, but all of your micro investing platforms, if you're using them, your fees each month are tax deductible as well. So keep track of them and put them on your tax return, because if that's not a money win, I don't know what is. Lots of questions are coming through, my friend, about international investors. So people are saying, I'm in New Zealand, can I use it? Are people allowed to use Superhero yet if they're international?
Unfortunately, not yet. So Superhero, I think everyone's seen it. Well, they say to me, I see Superhero everywhere. So I think people assume we've been around for quite a long time, which I'm like, yes, great, have you signed up? But I think but in reality, we've only been in market 6 months. So we've only just launched. Which is so
cool. Like, you've launched and you've got this beautiful, slick product and you guys have such good people behind you. I just think it is such a powerful thing that people are already like, oh, I've already heard of you. Like, cool.
Yeah, I mean, the guys worked on it for quite a few years behind the scenes before it launched, but we have only just launched our first product, and so that there's a lot to come. So I definitely say watch this space. At the moment it is only for Australian investors, but there's definitely plans to add to the platform, and we've got plans to roll out new products this year. One of which will be in the superannuation space. So we spoke about super, and that'll be coming up, which will give you a bit more investment control over your super. Again, I won't go into that. Maybe that's for another time. But there's more coming.
Super one. So many people have questions, and maybe we do a follow-up one on super. But I think it's a no-brainer that a company called Superhero does a super product. So watch this space, and the best way to hear about that is to sign up. Totally.
One shameless plug in there. Sign up. It's free and it only takes a few minutes.
Fine. I also put the link in our chat to make that super easy for you guys. The last thing that I'm sure a whole heap of people are sticking around for, we had a competition, Rach. Do you want to tell everybody a little bit about the competition that we've been running together? And then we can tell everybody who won?
Amazing. So, we ran a competition, which I'm sure many of you saw on the Instagram. Which was to go into the draw, we call it a draw, it's a digital draw, to win one of 2 $500 Superhero wallets. So thank you so much.
So cool.
Yeah, so you can get started with $500, which is like a decent amount of money, right? Like,
I'm sorry, that's
a big iconic order. Well, that's a lot.
But that's also 5 times your minimum investment.
Absolutely,
and also the monthly investment amount that if you were 21, you need to invest every single month to be a millionaire. Money win.
That is pretty cool. So
let's just be really dramatic about it.
Let's not promise too much, but
I'm sorry, if they invest well, that's on them.
True. The winners of that, and then I'll call out the Instagram accounts now, and then what we'll do is you'll get a message from the Superhero Instagram account, and we'll get your details and make sure you get that wallet. So first up, we have Sally Watson. So the Instagram handle is Sally_Watson_. And the second one is Kay's Ads. So that's KAYS
I have them in our chat already.
There we go.
It's very exciting.
So congratulations, guys. I did just see one more question. Does Superhero have account keeping or admin fees? Which, sorry, Victoria, I just want to call out, which I think is really important. No account fees. So that is a bit of a differentiator compared to some other platforms as well, not all but some. We don't have any account fees at all. But congratulations to the Instagram winners, and you'll hear from the Superhero team, which will probably be me very shortly.
Kayla says, "Oh my gosh, thank you." Kayla, I'm so excited. When Superhero said, "Oh, we want to give away $500 each," so I'm like, "This is literally going to set someone's investing journey up," and they're going to be so excited. Kayla said, "This is so exciting."
Amazing.
Through 2 orders. Then while watching, I'm so very thankful and excited. How exciting.
Congratulations.
She's literally investing while on this webinar.
Love that. Love that.
There's no one more deserving.
She's a go-getter. She's on it.
Right.
Amazing.
Guys, I think it is time for us to log off, go home, have a cup of tea. You guys, I might pop a thread up in our Facebook group after this for you guys to continue the conversation if you would like. I'm also going to upload the YouTube. I'll download all of this and do that tomorrow, get it up, and I will email it directly to everybody who had signed up to the webinar so that they don't miss a thing. And I will also send you all of the slides that we presented tonight so that if you've got any questions, you can just refer back to them. But thank you so much for joining us. I'm so grateful for each and every single one of you and the She's on the Money community and the support of our friends at Superhero, which have become good friends of ours. So see you later, guys, and have a really good night.
Thanks for coming, guys.
Bye.
See ya.